China have extended their trade truce for another 90 days, just hours before the world's two biggest economies were set to raise tariffs on each other. President Trump signed an executive order to keep the pause in place until November the 10th, while Beijing also announced an extension. It means the U.S. will hold its levy on Chinese imports at 30%, and China will keep a 10% tariff on American goods. The White House says the latest extension will give more time to continue talks dealing with trade imbalances and what they consider unfair trade practices. Meantime, this morning, China has announced a preliminary anti-dumping duty on Canadian canola imports. The provisional rate will be set at nearly 76% starting Thursday. It is a fresh escalation in a year-long trade dispute that began with Ottawa imposing tariffs on Chinese EV imports last summer. China is the world's biggest importer of canola and sources nearly all of its supplies of the product from Canada. To help us understand what this means, I want to bring in CTV's Colton Prale in Ottawa. Good morning, Colton. So let's start with these new anti-dumping laws. What does this mean for Canada, and what's behind this?
Yeah, really significant impact, Marcia, to canola farmers. This is an industry that's about 40,000 farmers. Primarily, it's centered in the prairies. Saskatchewan is the largest, but Manitoba, Alberta, both to smaller extents as well, have significant canola exports. And China, outside of the U.S. and Japan, China is the market. The U.S. is the largest market, but China takes in about $5 billion a year of Canadian canola in exports. And what is concerning is that this was an estimated or an expected escalation of the conflict between China and Canada. We've seen these agriculture and even aquaculture tariffs for quite some time, as you mentioned, in response to the EV tariffs that Canada imposed on Chinese EVs, but also on Canadian tariffs or Canada's tariffs on Chinese steel and aluminum. And so this is a response to policies that Canada implemented in part to line up with U.S. trade policies. And we're seeing the backlash now as our country is being caught in the middle, trying to deal with one trade front and appease the U.S., while also dealing with now a new trade front, which is angering China. And this is going to leave canola farmers in the middle because, while we had seen tariffs or anti-dumping duties in place on canola meal and canola oil since March, the real concern was that we were going to see this escalation to canola seed generally. Of the roughly $5 billion in exports that go to China, $4 billion of that is in the canola seed. And so this is essentially putting it at a price that is so high, at 76% duties, it's essentially saying, we don't need your canola. And so this opens up Australia, Ukraine, Russia to come into that market right now that previously Canada has really dominated in China. I mean, this is one of the biggest canola markets in the world, and Canada was almost the exclusive provider. And so this is going to have a huge, huge impact on farmers in our country because they are losing one of their biggest buyers. But it also shows the escalation in this trade dispute that we have with China, but also the challenge that Canada is in right now, not trying to anger the U.S., but in doing so, opening ourselves and our industries up to vulnerabilities and exposure to Chinese retaliation.
Meantime, Trump was asked yesterday about where things stood with China. He said ultimately he sees a meeting happening with Xi Jinping, and then we have this announcement that the tariff truce essentially has been extended for 90 days. What's going on there?
Yeah, that's in large part, as you mentioned earlier, these are the two largest economies. And so if you compare, say, the Chinese situation to the Canadian situation, those are the two countries that retaliated against the U.S., that imposed counter tariffs. But what we saw was the levels that Canada and the U.S. were operating at were much, much lower. We're talking about 25% tariffs, for example, or 35% now, and lower counter tariffs. The U.S. and China were at a very different rate. If you think back to April, we were talking about 145% tariffs imposed by the U.S. on Chinese goods, China responding with 125% tariffs. That was so high, it was essentially a trade embargo. And that's something that would be incredibly damaging, especially to the U.S. economy. China is their third largest trading partner in the last month, behind Canada and Mexico. But if you look at it year to date, and you look at trade deficit, for example, which is a big thing the American president focuses on, you start to see why they're so much more exposed in that relationship than in the Canadian relationship. Because in trade with Canada, the U.S. is at a deficit year to date of about $22 billion. With China, it's $111 billion. Primarily, they are importing goods. Very few goods are getting returned to China, or very rarely is the relationship reciprocal in that way. You're not seeing China import as many American goods. Now, that's changed a little bit over the past few months, but there's still, in this most recent month, almost a $9.5 billion trade deficit. And so the damage to the U.S. economy, the inflation that this could cause, but also the added costs that would be borne by U.S. businesses and eventually U.S. consumers would be incredibly high if we saw a return to that 145% tariff rate, which is why you saw both countries there backing off, essentially. No one really wants a trade war of that magnitude between the two largest economies in the world, and the damage it can cause is so much greater than the dispute we're seeing in Canada, especially when you take into effect the effective tariff rate that Canada is paying. That CUSMA exemption brings that headline rate so much lower. That's why China right now is the priority for the U.S., and we've heard that from their ambassador. We've heard that from senior officials as well. They're focused primarily on getting a deal done there because that's the largest exposure that they're currently facing.
Interesting. All right, Colton Prale, thanks for that. We'll talk to you again later this morning.